is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, a big theme we've discussed this year is business adoption of blockchains. We're not talking about enterprise blockchains, something that was popular in the 2016-17 period when people were saying blockchain good, Bitcoin bad, but rather public blockchains for the enterprise. By that, I mean big companies looking to build on these networks, looking to deploy assets, launch products and applications, or to try and reimagine or reinvent all sorts of business processes that they do. And this is something that has really caught on in the last year or so. A study done last year showed that 60% of Fortune 100 companies planned to do some kind of major crypto project in the coming year. That was before, before the election of Donald Trump, which I think has kind of paved the way a little bit more for business development and experimentation in this space. So you've got these two concurrent tailwinds that are happening right now. Number one, you've got regulatory clarity. I think the regulatory situation has gone from headwind to tailwind. We're seeing new laws, new approaches from the SEC and others. And then you're also seeing the technology itself continuing to evolve to the point where I actually think it's now ready for prime time. So there's these different public networks where applications and projects can be built. But unlike with the web, the first era of the web, there are various different networks to choose from, each with different designs as well as benefits and disadvantages. And I think this actually creates a big challenge for a lot of companies. Where will they find a trusted institutional grade platform to deploy these new products and services and actually do real work in crypto? Well, today we're very lucky to have a repeat guest and a fan favorite of DeFi Decoded, Luigi D'Onorio DeMeo, who's the Chief Strategy Officer at Avalanche, the team behind Avalanche. He started his career as an institutional trader at Citi, focusing on credit and equity products before moving into consulting and eventually founding a decentralized app for himself in 2018. Luigi joined Avalanche in 2021, where he held several leadership roles ranging from head of DeFi, head of developer relations, and interim COO before stepping into his new and current position. Today, he's focused on shaping long-term strategy, building partnerships, and driving adoption of Avalanche across industries from finance to gaming and beyond. Okay, that's a bit of a mouthful. Avalanche, for people who know anything about crypto, will know that Avalanche is a top 20 crypto asset. It's got a market cap of $10 billion. It boasts over $2 billion of TVL, which makes it one of the leading platforms for DeFi. And I think one area where it's kind of distinct from others is that it's a trusted platform for a whole bunch of big companies and organizations like Citi, KKR, Skybridge Capital, California's DMV, FIFA, and just announced recently Toyota. So as businesses are looking to, deploy in the public blockchain network, many of them have seemingly found Avalanche to be better than the rest, and that's where they've started. But there are a lot more companies that are not doing stuff in blockchain than are doing stuff in blockchain, probably like 98%, right? So the question now is, where do the next wave upon wave upon wave of business look to build? And once they get past that pilot or project stage, where do they actually look to do real development and deployment? So anyway, that's my preamble. But first off, let's just say thanks, Luigi, for joining us. Good to see you.
Thanks for having me, Alex. I'm excited to be here again. I think it's been a while, but seen you a lot recently, so that's always good.
Yeah, we have. We've seen a lot of each other. I'm finally back in my home office, so I no longer have as much bookcase envy as I did before, because you've got a very nice bookcase situation.
It's pretty empty though, if you haven't noticed.
Well, I've got some books that you can borrow if you want. Here's one you may have heard of.
I have the Tapscott book up there somewhere.
Probably Blockchain Revolution. So Luigi, the last time we had you on, we talked a little bit about your bio and background and your whole journey into the space, and obviously that's important, but we want to get into the meat of it. But why don't you just tell us a little bit about what's happened, I guess, in the last couple of years with Avalanche specifically? I think people know the market has gone through ups and downs, and overall is much larger now than it was before, and there have been some change in the political landscape. But what's new with Avalanche? Let's start there.
Yeah, I mean, a lot, right? Like sometimes I have to fully zoom out to kind of remember how far we've come. Avalanche came to market in 2020 with, and bringing really a revolutionary consensus protocol. Basically, it was like, hey, we can come to consensus much faster, which will provide better user experience for the users. And the first thing we did in 2021 really was launch that fast consensus on the EVM, and that was the C chain. Everybody, flocked to use it. We had the Avalanche Rush program. There was a lot of DeFi, and this is a public permissionless chain like an Ethereum, but it just felt snappy, felt fast. That was never the entire vision of Avalanche. Like the original white paper and everything that was conceived by Emin Gunsier and the team was really about how we're going to build this network of networks. The vision was always we'll need to horizontally scale. You'll never be able to put all of the value that we want to distribute via blockchains into one chain. We also believe that people and enterprises and builders will want customizability, and because of that, they'll want their own chains. That thesis is held strong from the beginning, and we're continuing to push that forward. So I think, in 2021, we had the demonstration, sort of like the evolution of the C chain, which is kind of like our liquidity hub. And that's where we started. After that, we started to launch what were called subnets. Subnets are basically customizable L1 blockchains that are in the Avalanche network. Those have recently been rebranded to Avalanche L1s from subnets, but and that was really post the recent Etna upgrade that we had at the end of last year. And the reason for the rebranding was basically we made it much cheaper to launch your own L1. Yeah. And we also we reduced some of the restrictions as well. So, now Avalanche L1s have been launched. You mentioned FIFA. There are many others. MapleStory, which is one of the largest gaming IPs in the world, predominantly in Korea, has launched their own Avalanche L1, and they've provided a platform for gamers to use. You have Godzilla, which is a PlayStation Xbox game, has their own L1 powering that entire game right now. We've done work with JP Morgan, as you mentioned, the California DMV, and many others as well. So I think we started with our hub. We grew out the Avalanche L1s, and then we shipped about a year ago the interoperability amongst those L1s. So in production today, you have a network that allows for anybody to launch their own chain, but also leverage all the shared services, all the liquidity, and all the great stuff that the C chain has with basically 2 seconds of interoperability finality. So you can get back and forth really fast. And we think that differentiates Avalanche versus Cosmos, whereby they didn't start with the hub and have struggled to ever put one into existence since. And then Ethereum, whereby the hub doesn't have any interoperability given how the layer 2 construct works. So, we feel like from an architecture, infrastructure, and blockchain perspective, we have a great technical foundation in architecture. Yeah. And now I tell people all the time, going forward, the technology is table stakes. Blockchains will largely be commercial and business, games going forward, if you will, right? Like it's going to be a competition from that perspective.
Well, you made several interesting points there. So one of them was the design and how it compares to other kinds of platforms. Like we've had a lot of folks from the Cosmos ecosystem, and people sort of the consensus is like the Cosmos technology stack is really interesting, but there's no value capture on the main chain. In fact, the main chain itself is kind of like a subnet, right? And then with Ethereum, their scaling roadmap. Ethereum is this thing that has a lot of value and captures some of it, but a lot of it is grabbed at the L2 level, right? And so the idea of like having a customizable technology solution as an industry or as a company is very attractive. And that's not just me saying it. Like if you look at what's happening recently, some of the big announcements have been Stripe, Circle, and obviously Coinbase with Base, but companies launching their own blockchains. Yeah. Which, is sort of interesting. People didn't launch their own internets. They built on top of the public web and they built applications and services on top of it. But now you're starting to see companies themselves like actually trying to build the underlying technology that they're going to deploy something on top of, which is interesting because it seems to like run against the monolithic model of like an Ether or Sol, and maybe more favorable to a Cosmos or an Avalanche in the sense that you can, have app chains. And Andrew will go deep on this because he's got a lot of thoughts on this topic. And so I'm wondering if it's like an idea whose time has come, or like, like the Avalanche thesis is kind of meeting a moment where businesses are looking for that customizable solution. And they're not, maybe in the old days, they just experiment on stuff, but if they're actually wanting to do something real, then they want to have more ability to shape that. Is that something that you're seeing as well?
We are. I mean, I would say the interest has been there for a while. It's like sort of like steadily grown over time, and then this year kind of hit a bit of an inflection and accelerated exponentially. And the reason for that is obviously the regulatory. And we always knew that was a blocker, right? Like we would talk to all the institutions. They were always interested, but never felt comfortable putting themselves out there in terms of like doing something in production, especially on the financial services side. And so, with that, a bit of an unlock, like, for example, true legislation in the U.S. with the Genius Act, you have almost every Fortune 500 company mentioning stablecoins in their earning transcripts. That's going to be, and stablecoins, in my opinion, were always the killer app for crypto. Being able to move dollars frictionlessly is an unbelievable use case that unlocks so many other things in the world. In terms of, people wanting their own chains, businesses wanting their own chains. You have Robinhood. They're launching their own chain. Coinbase, you mentioned, Stripe and Circle.
Yeah.
The reality is that these enterprises and institutions want to control their own environments. What's unclear is whether they'll want to do that forever or whether that's a stepping stone in terms of the real long term.
Yeah.
I think there's value, especially on parts of a database that are much better suited to being on blockchain. And I think a lot of people forget about this use case for blockchains, but it's not just, trading, moving stable coins and stuff like that. Like, blockchains are really good for data replication. They're really good for data consistency. And they're also really good for allowing different enterprises and institutions to partner with each other in a way that's seamless, right? Like, I can have my own chain, you can have your own chain, and then when there's time for us to do some sort of partnership, or we want to do a campaign together, or loyalty points campaign, whatever, something, we can easily do that. We're on the same environment. Smart contracts can interact easily. And that's different than you trying to tag my API and all this other stuff. And then we do an off-chain financial transaction. This can all happen seamlessly. So that's a use case that people don't think about enough, I think.
Yeah, that's actually really interesting. Like EVM as like a universal API.
That's how I think about it for the non-financial use cases.
Yeah, that's very smart. And also, like, you nailed it on its head in terms of like verifiability, all that type of stuff. I think there's a really big question. I guess my big question is, you mentioned all these different big companies launching their own chains, but there's a pretty big difference where Robinhood and Coinbase are launching as L2s on Ethereum, whereas Stripe, I believe they're launching an L1. And a couple other Stripe, I think Circle is also launching as an L1 as well. Is that, first of all, I guess, are those with Avalanche? I don't know if I saw that, but I guess how are you thinking about the difference between like, why would a big company choose to launch an L1 versus an L2?
Yeah, sure. I mean, there's a lot of different reasons. The first one is, depending on the use case, L2s traditionally operate via centralized sequencers. And, depending on what you're doing on that chain, it might be hard for you to get like a consortium or something like that. Just because, you're running the sequencer. Let's say you're JP Morgan, Goldman might not want to participate if JP Morgan's running the sequencer. Whereas if you have a permissioned chain, we can all do a consortium together. And I know this is the old 2017 narrative, but you would never forget. It's amazing how many of those narratives are actually correct. It just took a while for us to get them to market.
Well, just to clarify what I was saying, it's not so much that the narrative was wrong, but that the idea that we're going to build our own thing from scratch versus leverage an existing technology stack. I think that was there was a time, Luigi, where it was like use Accenture will build you a blockchain. That
I
kind
remember.
of
I remember.
I'm not sure. Maybe Accenture will be an implementation partner for Avalanche
Yeah.
or for Solana or something, but they're not going to like build something from scratch, right?
Yeah, I mean, there will be, and so to Andrew's question, right? Like, there are certain companies, enterprises that will want to build from scratch, and those are the companies that are deep in crypto already,
Yeah,
that have unlimited resources, and for whatever reason, just don't want to rely on another stack yet. And that is Stripe is a perfect example of that, right? Like Stripe is so big, why would they roll up to Ethereum? Right? Like,
yeah,
I can't build my business on whether or not this Ethereum thing is going to keep running, right? Like that's how their mentality is versus, I think the way it's going to start is the non-massive enterprises will be like, wow, like Stripe, Circle, Robinhood, they're all building their own chains. We'd love to do that. We don't have the resources internally to like hire 50 people and take all this technical risks. What platforms can we leverage to build our own chains? And I think Avalanche will have a really great and compelling offering for those. And it already has with the likes of FIFA and MapleStory and others.
It's interesting because the total value of the whole crypto market cap is maybe $4 trillion, which is a big number, but like it's about the same size as Nvidia and not much bigger than 10 other companies, right?
Exactly.
And it's sort of like it's kind of worth pondering that because if Apple or Nvidia wanted to do something like where they were like relying on a blockchain network, and you can imagine like the Nvidia's got this software developer kit that they've been building for like a decade. That's like it's not just chips, right? It's everything built on top. It's like we're going to do something on chain. Like their company is as big as the whole crypto market cap. The idea that they would rely on something smaller, the value proposition has to be pretty compelling. And it's an interesting dynamic that I don't think I fully appreciated, but it's starting to take some shape now.
Yeah, we hear that in various conversations with enterprises. They're like, well, like we're XYZ, we're not going to just like leverage your platform, like we can't take that risk. Right. Because, like, for example, many banks still do on-prem.
Mm-hmm.
They don't even use cloud yet. And so it's, it takes them a long time to want to get to that level. Now, I think the reality is that there's a huge amount of companies that can't do that. And that's where the cloud served them well. I think blockchains will serve them really well. And I think blockchain platforms like Avalanche that allow them to launch their own chain in 3 minutes will be exactly what they want. They'll get everything they want, but they're not trying to flex that they're this technical juggernaut, right? Like they just want to get the use case.
Yeah.
That's what the market
There's so
is.
many examples in the regular technology world, like cloud is one of them, right? Where it's like for some of the biggest, the Department of Defense, JP Morgan, the big tech companies themselves, they run their own clouds, but most companies don't.
Exactly.
It's like Shopify, like, most companies don't need to set up in a giant dedicated e-commerce team and site. They just like leverage a technology platform. Like, and you could go on and on like this. Anyway, sorry, Andrew, go ahead.
Yeah, sorry. I really want to talk about the RWAs because like I feel like Avalanche has sort of quietly become one of the biggest like RWA ecosystems, and I don't think people really give it credit for it. Like I was seeing, BlackRock, I believe, announced their the money market fund Biddle, which was Biddle. I don't know how to say it.
That's how I say it.
On Avalanche, I think in conjunction with Securitize. Franklin Templeton had sort of a similar type thing. I saw KKR was actually tokenizing a portion of their strategic growth fund on Avalanche as well. I believe JP Morgan, Janus Henderson, a bunch of these big financial institutions are all looking to sort of tokenize assets on Avalanche. Do you want to just talk a little bit about, I guess, it's interesting because like for someone who's in crypto Twitter, lives on crypto Twitter full time, It's not really something.
You're referring to yourself, right?
I'm talking about myself. Yeah, terminally online.
Not me.
Yeah. You guys are better than me, but I'm terminally online crypto Twitter. But I never see anything about this on really, like, I feel like it's incredibly under discussed. But when you look at like the fundamentals, it's pretty wild. I guess, do you want to just talk a little bit about, I guess, RWAs on Avalanche and how you guys have grown that to be so big?
Yeah, I mean, look, the team had the written mission in 2020 to digitize the world's assets. That's been our mission on the website since the beginning. It's kind of been our focus. Our president, John Wu, is a really stellar TradFi career. I worked at Citi for a long time. My background's in finance. A lot of the team is the same. Morgan Krupetsky, who heads up our institutional efforts, I brought her over from Citi as well. So the team has been acutely focused on financial services as a great use case for blockchains. I don't think that's anything surprising to hear, but we think we're going to rewire the entire financial system, and that's actually a mission worth pursuing. Now, it doesn't mean that there are other use cases that we won't be involved in, but we definitely have a strong opinion here, and we'll be focused. So, this week we announced $300 million of Skybridge, which is Anthony Scaramucci's fund, will be tokenized on Avalanche. I think, like, if people, crypto Twitter loves the RWA.xyz leaderboard, so that'll put us, I don't know, like 4 or 3 at that point once those get added. And then we also did an announcement with Grove, who's going to be bringing over $250 million of assets. That'll put us at like 2. So I mean, like, there are those who look at public leaderboards as and take that as gospel and things like that. But, like, if you understand the fundamentals, if you're following what happens, I think you'll know that Avalanche is in every conversation as it relates to institutional and those who I talk to within the industry who are bidding on the other side of us or are at these actual companies. They always tell us the same thing. You guys, you're buttoned up, right? Like, you guys have gotten your different certifications. You have an internal team in AvaCloud, which actually works with enterprises to launch their own chains, right? Like, it's stock compliant. We're doing the dirty stuff, the annoying stuff that nobody else wants to do. That it really matters at the end of the day. Like, if you're an enterprise and you want to go pick somebody to launch your chain with, number one, you want to pick somebody that you can call that's going to pick up the phone and going to fix the problem, right? Because you don't know how to fix it yourself, frankly. Like, we've seen that be an issue over and over again. With Nexon, which is the public company behind MapleStory, that was a really intense deployment. That's a public company, really large one out in Asia, and getting them to launch their own blockchain was something that they were originally going with Polygon. We're having issues technically, and ended up coming to Avalanche. No grants, nothing like that, and picked the technology and launched it. And I think that's really the kind of stuff that we have been trying to do. This week alone, Toyota, I think the largest manufacturer of cars in the world, released a white paper with Avalabs about their own mobility network and being able to do that. That's also something that I don't think crypto Twitter was running with this week, but pretty crazy, right? Like, the companies are usually apprehensive to co-marketing with blockchains so exclusively. So it was interesting to see that white paper. I think everybody should give it a read. It's incredibly detailed and fascinating read.
Yeah, you said something earlier about digitizing the world's assets as being a founding principle, going back to 2020. And you also said something about stablecoins being, one of the killer apps or the killer app, and been kind of reflecting on that, especially as it relates to RWAs and security specifically. Because, the first thing everybody wants financially in the world is a US dollar bank account. And stablecoins solve this for a lot of folks. Maybe not every function, but the moving and storing of value. And if you want to get adventurous in DeFi, lending and borrowing and so forth. But then after that, what they want is a US dollar investment account. They want to be able to buy Mag 7 stocks. They want to be able to buy Palantir. They want to, own, the index. And for most people in the world, like that's impossible. Now we have this sort of rail that allows people to own a tokenized dollar. And once you've got tokenized dollars that you don't need to spend on things, what else could you do with it? Well, you can invest it. And so to me, like stablecoins are in a way a form of Trojan horse to open up tokenized everything to the world. And I think that's really, really exciting because like the first era of the internet basically made information accessible to anyone who had an internet connection. And it didn't matter where you were, you could access the same URL. And now you've got this new technology that allows anyone anywhere to access the same asset, regardless of where they are. Before, there was all sorts of problems. Was the bank set up there? Did you have capital controls in place at the government level and so forth? Some of those things still exist, but the technology is basically leapfrogged all of that legacy system. And I find that to be, really, really compelling. And so I think about like Skybridge and these other firms that have launched tokenized funds or RWAs on chain. And I think we're almost there, but we're not quite there. Because to me, like the most exciting thing would be if somebody somewhere who follows Anthony Scaramucci on Twitter, even if they're in Brazil or something, can be a fractional owner of actively managed fund run by this person. And it doesn't matter if they're located here, there, or anywhere else. They can access it just as the web allowed us to everyone to go on YouTube and watch the same video, right? To me, like that is the most compelling thing. And maybe I'm mischaracterizing the Skybridge thing. Maybe that is what's happening. But I have found that often the technology is running up a little bit against the regulations, and there being a sort of a lack of clarity on that point. I don't know. Just a thought. I don't know how you think about those things.
No, I mean, I think you're 100% right. Like, there are certain things that we just can't do. All right, like for example, the money market funds. A lot of them have minimums in terms of investment minimums.
Yeah,
that's just regulation. There's no technology blocker there. You should be able to put $5 in it. And there's like a bunch of products that are working around that. But like for the BIDL, I forget what the investment minimum is. It might be $1 million or something like that. So that's not really, democratizing access, I would say. But it's a start. And I think what you mentioned with stablecoins is really interesting. The reason stablecoins are important as it relates to the RWAs is once we start trading RWAs on chain and you can easily settle via stablecoin and move into another one, the capital efficiency that institutions will have will be so much better than the legacy system that they'll be forced to do tokenized assets, right? Because the combination between stablecoins and RWAs is so integral, so so compatible that it will just make sense to trade on chain versus to trade how they're trading now, because you could just settle so much faster into dollars and back into another asset. I think people forget also you can't swap, or not that you can't, but it's very it's not typical to swap from stock A to stock B like you do in Uniswap. You swap to dollars first and then swap to the next stock in the legacy system, right? And that's something that crypto can make a lot easier as well. And I think you could kind of make things more capital efficient if you do that. We recently did an announcement with Denari, which is a platform building their own L1 for tokenizing stocks. I think the founder, Gabe, was on he had a good Bankless podcast that I think is worth listening to. And, they have a whole different vision about building their own DTCC basically for tokenized stocks on their own L1 on Avalanche. I think it's worth checking out as well.
Awesome. Yeah, I'll definitely check it out. I think I do want to shift a little bit because I do also want to get your opinions just on the market generally.
Sure.
I guess what's like sort of beyond Avalanche, just kind of like you personally, what subsectors in the crypto space are you kind of most excited about right now?
As it relates to just technology, tokens?
Yeah, so what RWAs, crypto native DeFi, stablecoins. Obviously, stablecoins are really big right now. I think you mentioned MapleStory and sort of like the on-chain gaming.
Yeah.
And then, there's so many different decentralized AI. So I'm just curious, like what are like the areas like over the next kind of 12 months that people should keep their eye on that maybe don't get enough kind of spotlight?
Yeah, I would say I'm really interested in sports. I think that there's going to be a ton of this is like going to be another not sexy use case initially that will like just become sexy over time, and that's like loyalty points with sports. Like we did with a partner called Uptop. The Cleveland Cavaliers and the Detroit Pistons loyalty programs all run on Avalanche, and nobody even knows, and that's a great thing, right? Like it's working. I think you'll see a lot more teams do that and pursue new revenue models using blockchains, and that's going to be a huge unlock. But what I really want to see is I want to see people being able to spend stablecoins on chain. I want to see people get paid in stablecoins on chain, right? I don't want to see any more off ramping. I think when we get to that point, crypto will effectively see an exponential rise in adoption that will look like the internet, right? Because there's no need to let me take my $10,000 in USDC, go to my bank, and then go do whatever I want to do. It's here's my money in my account. I spend it, I earn it, I always have it here, and those deposits will grow exponentially so fast that the use cases will then become interesting because money doesn't have to leave off to go off chain. So that's a signal I always look for. Like when U.S. stablecoins flip Bitcoin, I think will be a very telling signal in terms of adoption. And then when tokenized securities flips that, it'll be even more interesting.
Yeah, a when, not if, as you say.
Yeah, when.
Yeah,
I would anticipate that happens in the next 2 years.
Next 2 years?
Within the next 2 years.
And so in that environment, Bitcoin is flat or up from here?
Still up, probably.
Still up? Yeah. So in other words, like working backwards, it's like a 10x to 15x increase in the market size.
Just imagine that one or two multinational companies has their own stablecoin. Like, just imagine the amount of growth you would have of stablecoins. Like just Apple's balance sheet.
Yeah, totally.
And there's just a lot of dollars out there to be tokenized via stablecoins, and when they are, that unlocks so many opportunities for people to build interesting products on chain.
I've been having a lot of conversations about stablecoins recently. Kind of unsurprising. I think like everyone is talking about stablecoins because everyone's trying to figure out like where's the value capture going to happen in the long run. And so far, the value capture, not to overcomplicate it, has happened at the issuer level, specifically Tether. Like Tether as a company, if it were, I think if it were a publicly traded company, it'd have top 20 in terms of earnings, right? So like it would be an S&P 20. It's like only the big tech companies make more than this company, which is kind of insane to really like ponder. But, USDC Circle, on the other hand, is sharing revenue with Coinbase. Coinbase is launching its own chain. Maybe Coinbase is trying to muscle in on that. So maybe the issuer isn't where the value capture happens. And you said something about loyalty points. And, the way most payment networks, make money today is on loyalty programs, or at least that's a big part of it. I don't pretend to be an expert, but like that interchange fee that merchants complain about is actually something that subsidizes a whole loyalty program for credit card holders. And so I'm wondering, like, the idea of like a state, so we can't, according to the Genius Act, I think the reading is you can't like pay interest on stable coins because then it's a security. But what else can you do with a stable coin? Like, can you do a tokenized loyalty program? Does that count as like a distribution dividend? And if you can, then to me, that's like fertile ground, really fertile ground to do a stable coin with a loyalty program, which gives you tokens that maybe it's conventional, like, whatever, airline points or things you can spend at merchants, or maybe it's, airdrops of other stuff. Like, why not have like a stable coin? The more you use it, the more like random airdrops you get from other platforms or something like that.
I could totally see, there being point systems for stable coins.
Yeah.
What I see like a good example would be let's take like a DraftKings, for example. This
Yeah.
is a company that has a lot of customer deposits in the company.
Yeah.
That's idle money just sitting there. Like, go create DraftKings stablecoin. DraftKings now just clipped 4% of all their customer deposits as a new
Hmm.
source, and that's money that is not the bank's revenue anymore, right? Like that is actually going to be a big complication for banks moving forward. I think that would be something that they'll have to deal with and potentially lose some of those checking account deposits. So I'm really fascinated to see how the banks respond to that. Like, I'm fascinated to see 2 years from now, um, is the checking account the place where people store their money that they want to spend, or are they using different fintechs and things like that?
Yeah.
Uh, I think
I mean, I
that
think it's like this is a long time coming
yeah,
that it's got to change, or at the
there's
very
no
least,
innovation,
it'll become fragmented. I don't think people like our parents' generation they're going to close their bank accounts,
of course. No,
or even that we are honestly at our age and stage.
no, but you just might use it more.
But you'll use other services like you do in any other sort of
Yeah.
traditional, like in any other industry.
Yeah, I mean,
Yeah,
if you
exactly.
think
Yeah.
about a company that has $100 million of customer deposits. Right? That's $4 million in revenue right there, just for minting a wrapped tokenized asset. And that's just like companies are going to look at that and be like, yeah, let's do this. And
Yeah.
I
Well, that's the
think
thing. Like, I just think like for so many people in the world to be able to get exposure to all of these different companies and so forth, like you could probably have, if people are willing to hold a stable coin for a long period of time and not get any interest from owning the dollar, then why wouldn't they feel comfortable owning like the QQQ ETF without interest, like it does pay dividend, or the S&P 500 pays like a 2.5 or
it does.
2.5% dividend yield. It's like, yeah, but if you're like Joe Blow and I hate to say, like, like in India or something, it's like I can own the S&P 500, the aggregate of American capitalism. Oh, I guess I miss out on 2.3%, like whatever. Then you could basically clip the entire dividend yield, like just like how stablecoin issuers clip the entire net interest that they're earning on deposits. And probably if you were like a Goldman Sachs who did this, or someone, then the securities that you hold in your inventory, you could probably lend out and
That's right.
earn additional interest on that. So you could take the entire dividend yield plus any interest income from the shares, and you're still providing an amazing service that people would gladly get access to, right? But that's where you run into the regulations. But I just think like it's just such an exciting.
There's just more utility, and when there's more utility, there are a lot more use cases. Like, at the end of the day, crypto is a 100x improvement over TradFi in terms of capital efficiency and speed, and being able to send like we talk about the checking account. If I had this stablecoins, I just send money to my cousin in Italy. He's got it in a second, not 7 days or 5 days with a wire.
Yeah.
And that's just a better product at the end of the day. And when you have and so if he can spend those stable coins, which with our partnership with Rain, which is basically a Visa credit card, he can just spend it. Like, he doesn't have to take that USDC, go to his bank, use his credit card, pay his bill back. Like, he just puts it in the crypto wallet via Rain Avalanche card, and boom, he's off spending money with his Visa card like nothing changed.
Yeah.
Really quick before we let you go, obviously you're more on the builder side, but the market's very hot right now. From your sort of unique vantage point, what do you think about sort of the market dynamics? Obviously there's a digital asset treasury boom on the Bitcoin, Ethereum side. We've talked a lot on this show about how we think altcoins look on a relative value scale look pretty cheap right now. Just kind of curious your general thoughts on sort of the markets over the next kind of 6 to 12 months.
Yeah, it's been a really interesting. I don't even know if you can call it cycle. I mean, it's been a Bitcoin cycle. Bitcoin has kind of continued the same trajectory it's always had, right? Like it kind of does this, whatever, 70 to 90% drawdown, chill out a little bit, and then go for another run. And it's done that. It's gone for another run. I think that'll continue. Like Bitcoin is pristine. Like I'm a huge Bitcoin admirer since 2012 or 2011. And so I think you'll continue to see people see this as a hedge, as a macro product, effectively, and people will want to trade that a lot. Now, outside of Bitcoin, it's been a really interesting cycle. Alts have done terribly, and up until the last month and a half, that included ETH. And it's fascinating, like absolutely fascinating, to see the rip in ETH. Given that there's not been any change in fundamentals. When I say change in fundamentals, I mean on-chain metrics have not moved at all. Right? So there was this whole theme about rev and revenue and all this kind of stuff. Like no change there. Token just tripled. And that's all been off the back of uniting a very clear narrative and basically using traditional finance as a mechanism to buy more ETH tokens off the market.
And Tom Lee.
Well, I'm getting to Tom.
Yeah, it's like if you have a very compelling spokesperson, it can completely change the narrative.
It really helps, and Tom has a great audience in terms of like people who trade stocks but not crypto, who are listening to him on a daily basis, and so they've done a really good job of getting that narrative out there. But this is, I think, a really important dynamic because. There was a moment where a lot of people thought that crypto was all going to trade on only fundamentals in terms of like how sometimes stocks do. The reality is no assets trade on fundamentals in the short term. They all are a function of supply and demand, and valuation is the backbone over the long term. Mm-hmm. And so I think for the other alts, there's obviously this rush to get DATs out there. I'm really fascinated to see how DATs do with alternative assets because they're just smaller. And so, there's probably a propensity to be able to move them more. But there's also going to be a moment in time where these DATs, if they're not careful, can inflict a lot of damage on the market. So I think, if you're investing in any of those things, if you're looking at any of those things, you really need to understand who the team is doing it, and what kind of debt mechanisms they're using as well, because there is a lot of risk if they do take on too much debt.
Yeah, the capital structure is really key.
Super important.
And I think like after Bitcoin, I mean, even with Bitcoin, I think some of these converts in this capital structure could come back to bite a lot of these things in the market. Sure. But I think for anyone considering levering up a DAT that holds non-Bitcoin, I think it's like you're double dipping a little bit too much.
A little bit, yeah.
Like,
and so the market in general.
No, I think it's like obviously the idea of a wrapper in the public markets that gives investors exposure to a platform they can't otherwise access and a valuation that's reasonable. Perfect. But once you start doing all this other stuff, I think it becomes problematic. Anyway, I think we're aligned. Luigi, we've had chats about this. But.
Yeah, it's interesting because you can't. There's a lot of funds that can't invest in commodities.
Yeah,
as part of their investment mandate.
And ETFs, I'll add to that as well, because of the fund on fund, the fee on fee problem.
Exactly.
Yeah.
So DATs provide a way of access, and so if there's a situation where you're a fund manager and your competitors are outperforming you for buying DATs, now you're forced to buy DATs as well, and this is like going to be an interesting dynamic as fund managers compete if crypto. Is in more than a cyclical bull market, but in a secular one.
Yeah. And if it's in a secular bull market, then the rest, there's, a whole universe of investors out there who now have the benefit of a way to get exposure to various things. And that level of choice actually creates a problem because they don't have the same level of expertise as like a crypto investor might. And so they need to figure out what to buy, what not to buy.
Yeah, and also you think about Coin and you think about MicroStrategy, BMNR, to the extent that these get, to the ones that are not getting into the S&P 500 and indices. Now fund managers need to make an explicit decision of whether or not they want to be overweight or underweight as a whole. And that's just great because now there's, Wall Street's doing research on these companies, on these assets, and this is just like natural evolution and maturity of the space.
Yeah.
So I do think you will see a move in alts, but alts tend to move when risk assets writ large across all macro products tend to move. And that really, really hasn't happened, right? We haven't seen like small cap stocks rip at all or anything like that. So when you have that kind of moment, I think you'll have a real alts move.
Well, we're recording this only a few hours after Jerome Powell made what in my view was the most sort of mild comment. It's like, if things persist, we may need to be more accommodative. And it was like, through the roof. And so basically like what that means is like a rate cut next month is all but guaranteed. And everyone's pricing that in. I shouldn't say all but guaranteed, but like the probabilities are very, very high. And so now risk is on going into the fall as everyone kind of gets back into the groove of things. So, and things have been kind of held down for a few weeks, right? So I actually think this is a really interesting setup. Very interesting.
Markets love to do that though, right? Like everybody hedge into the news, and then it's like, oh, like we're back where we were on Sunday.
Yeah, exactly.
And I think it would be, a lot would have to happen for him not to cut at this point in September.
Yeah, absolutely. Listen, Luigi, this has been a great conversation, as always, wide-ranging and deep. So thank you very much, Andrew. Great questions, as always. And hopefully we can have you back on soon.
Yeah.
We just make a regular thing of it. We're finding that our best guests are the easiest to talk to. So thank you very much. Really appreciate it. That's it for this week's episode of DeFi Decoded. I'm Alex Tapscott. Make sure to like, subscribe, share this podcast if you enjoyed it, and it will help other people find it. Until next time, take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.